anything that is regarded so highly will have an Achilles heel.
Before we get to that, though, Kelly, I have a couple of questions for you. You said something very, very interesting, and that is that this is the second most hated bull market ever. Now, why is it a hated bull market? Isn't stocks going up a good thing? And if this is the second, then what's the first? I almost feel like that's a trivia question, but I'm just gonna put it out there for you.
First one was the bull market that occurred after the 2008 debacle and in the 2009 lows. When the market started to go up after seeing such carnage on the way down, it was a 54% decline. The Janus 20 index fund, which was the largest in the world at the time, closed its doors. So after 2008, in 2009, when the market started to rally, people couldn't believe it, but yet it climbed a wall of worry, literally to the point where we did recover everything. However, it did take 5 years to recover, but nobody wanted to believe in the market for the first year after the 2008 financial crisis. So that's the first most hated one, for the direct answer. I don't believe in the same similarities. I just know that hedge funds, including people like myself, I have to put myself in this category, have been a believer that something is amiss. This is kind of the reason why we've been focused on the conservative portfolio this year, because at least in the conservative portfolio, we are taking advantage of dividends. And this is one of those cases where I think I mentioned this before. I like it that if I'm wrong, or if we're all wrong and we're thinking too bearishly, you still can make money if the market goes up and actually outperform it. But however, if we stick to our guns for too long, we all run into something called FOMO, the fear that we are missing out on something. And that's something we always have to guard against. You're starting to see some of the FOMO here as the market kind of has rallied right into the Fed numbers. And the Fed numbers definitely knocked it off a little bit today, but it's still recovered for the most part. And two of the indices, again, were just up marginally on the day. There's another question out there, Aaron. I'll get to it unless you were going to ask me. It's about the AI, right, and the trend of the AI. And of course, exactly, that is why I pointed out those 7 stocks. I think everybody knows that those stocks I looked at were Microsoft and Apple and NVIDIA and Amazon and Netflix, etc. The ones in Google, of course. We all know that these technology companies today are the ones that will bring AI to us. And so the issue I have with this, because of this buzzword, and by the way, we are in this faction where we do use artificial intelligence to help generate decisions to guide the actual trading and investment of your monies. The word itself is literally associated with those large companies, and they are driving them. Everybody now and wants all things AI, including us as a flip company. These things have become exciting to people. And if we don't own AI, then we are probably missing out on something. However, I have to, and I can't help but think that when I went back to the early 2000s, when I was definitely deeply involved in the markets, the same thing was technology itself. Technology was going to dominate the 21st century. And I have no doubt of that. But that's also the same time that the NASDAQ rallied 70%. Right now, those 7 stocks, if I had to collectively add up the ones I showed you, in total, not on a cap weighted basis, but on an equally weighted basis, they're up over 100%.
Right. Triple digits.
Mm-hmm. And anything that goes up like that comes down like that. And that was certainly the case in 2000 when technology seemed like there was nothing technology couldn't solve. And then less than a year later, well, we all know what happened. The NASDAQ lost 70%. Am I saying that's going to happen now? No. However, anything that is regarded so highly will have an Achilles heel. And when the heel is tested, we normally find that it's weak. And if it's weak, if those stocks for any reason came down. So for example, Congress limiting the way we are allowed to use AI and or apply AI and or build out AI, that would definitely create a problem for the market and those investors that have ran those companies up so much over the last 6 months that that would, of course, I think everybody could agree, be a big problem for the stock market and the S&P 500. Yeah. And it would surprise pretty much everyone. No one expects that to happen. And that means, and I agree, the probability is lower, but that was the same way people felt that the technology bubble in 2000 was very unlikely to ever burst. And then when it burst, well, we all know what happened. It was a sharp sell-off, and the NASDAQ took more than 10 years to recover from that. Right. So again, we're in these kind of uncharted territories. I do believe there's some level of caution, but there is no doubt AI this year is the word for the masses, and it has created the momentum in those stocks, and those stocks, their market caps have become enormous.